Okay. What's going on, YouTube family? What's going on? We are back. Super excited, super grateful to be here. Um, Today is Sunday, June 29th, 2025, and we're gonna kind of roll our way back into this and into the new stream schedule. But today, what I'm gonna kind of go over is just last week, a very brief overview of what we looked at on the H1, just some of our plotted positions, and overall just seeing how we're seeing the higher time frame trend align with those lower time frame setups during our execution windows. So that's what I'm going to go over here for about the next 15, 25, maybe 30 minutes at most. Try to keep it kind of short here. So I appreciate you guys. My goal here is to obviously increase the quality of the content over time and be able to have actually add a mic. I'm gonna set up OBS so that I can pretty much stream overlay a lot of the content and just make it a little bit better for the community and the culture of everything. So bear with me, but the main thing is that we focus on is obviously trading and executions and getting to the next level in that situation. So I'm glad to be back, and let's get into the charts now. While I do this on Zoom, my screen might still pop up on the side. It might actually go away. We'll see. But like I said, what we're going to really focus on here is just higher time frame NQ, right? ES, really the futures indices, a little bit of dollar index. And sometimes I'll look at obviously like your QQQ and SPY, and then obviously a little bit of stocks. But today we're going to keep it very simple and just keep it with the futures slash like indices dollar. So let me go ahead and upload my screen here really quick. And we are going to start on the, okay, let's see here really quick. Okay, cool. So we'll start here on the higher time frame. We'll jump straight into the dollar index. Now, really quickly, Monday being the first day um, of this week and it being the last day of this month, we do want to focus on those monthly candle closes because those monthly candle closes, let me put this up here a little bit. Those monthly candle closes are going to, be people, getting out of positions, getting in positions, etc. So, looking at dollar here, when you look at this last month, so the month of June, we had a really bearish month here with the US dollar, right? So it really made sense when we actually go and flip over to, some of these months when we look at, excuse me, the Dow, ES, and Q, it kind of makes sense why over the last, 4 weeks, we've seen right here, this week here, and here, we've seen a massive push up because we've also seen, weakness in that dollar index in this last month. So, one thing I like to talk about a lot of times on all charts is noobs buy tops and sell bottoms, right? So noobs buy tops and sell bottoms. So just kind of letting this week and let Monday kind of play out as well because we have a short week with the and a jam-packed news week, right? So a short week Thursday. If you actually go and check, and I'll kind of show it before the end of the stream, but if you check on Thursday, we actually end at 12 noon Central Time Zone, and then we don't have really anything on July 4th that Friday. So we have a very short week, very jam-packed week, and then we also have a lot of things, switching over here in this week. So just be very careful with, your selection, and you're not trying to really, go too crazy. I don't think personally with home runs in this situation, you're looking for more like A to B setups. So we'll see what dollar does. We could extend down lower, right? 96 would kind of be like that target area. Um, but I would like to see what they do and how we close them up before I just make a decision. And then jumping into NQ, we'll look at all the futures here first. Like I said, those weeklies were really, really bullish. Obviously, we're, attacking all-time highs. So we have our eyes really drawn in on these levels to start the week and to see, since we've been playing these buy positions from April like 14th, April 20th, around that area, we've been buying this position up after we've seen this massive capitulation and huge amounts of fear come into the marketplace. All right. So that's going to be the weeklies, right? And then we have the dailies. Obviously, this is the front runner data, so it's a little bit different than reading that CFD. But one thing I thought was interesting is that we have had these double tops pretty much formed on ES since we started falling down, right? And there was so much manipulation back in February on these days on both of these assets that I remember, like when it comes to CFD and swing positions, that I was just like, ah, man, I can't believe this, right? But the market couldn't go up forever. So to see us make it back to this point just completely makes sense. And then when you jump into the 4 hours, and like I said, I'll start to kind of break down NQ and what we did last week. But when you start to look at those 4 hours as well, I mean, we're still very bullish and skyrocketing higher and higher and higher. So from that top down, it still looks very bullish. And then what I want to really just focus on today for you guys is NQ and ES, and obviously a little bit of YM. But the other thing is you have SPY at all-time highs, right? And you have QQQ, right? So people are gonna start distributing these orders, right? They're gonna start getting rid of these orders, right? And you just have to have kind of an understanding of where people are gonna do this stuff. If you've never seen this before, I'm gonna post this just really quick. See if you guys can see this. Right, because the market moves in four phases, right? And once it reaches these levels of distribution and starts, the buyers from these lower levels or these areas wherever they got in, they start to exit at that break of structure. You should see price relieve some in these areas, right? Something else that I thought was very interesting, if you're just, kind of peeping the markets, is going to be the Nvidia, right? So Nvidia, and the individuals that are buying Nvidia here, we've been watching this on the weekly come down to that demand candle and then mitigate out that 100 level up to the double tops. So you got to think if the markets are um, in sync, right, with NQ and Nvidia and stuff like that, that people exiting these positions could present sell positions on NQ as well. All right, so let's move back to Q. Okay, so we'll get straight into pretty much what happened last week for NQ. The 1 hour areas, some of those little intraday spots, some areas I can improve on, changes I kind of want to make for next week. So let me go ahead and do that really quickly here. I'm going to move you guys over to this one. Okay. Okay, cool. So just really quickly, so we can go through the fundamental analysis breakdown. So we're just kind of looking at what news we do have for this week. Remember, like I was saying, we have a very short week with July 4th being Friday. And then when you look at the news, I mean, Mondays, I like to look for red folders and just higher impact volatility type days. But Monday is pretty quiet when it comes to that type of news. Then Tuesday, we have, the month is starting the first day of the month. We've got a lot of news, 8:30, a lot of news 9. So that's going to be some really good volatile news. Wednesday, looks like we have a little bit of pre-market news, 7:15, and nothing really through that New York. And then Thursday is just like a banger day. Lots of news, 7:30. It's going to, draw in a lot of individuals into the marketplace. And then you just got to remember, like I'll show you guys here really quickly, that when you go to uh, this week, the end of the week, right on Thursday, you'll see that. Let's see here. Where's Thursday? Actually, sorry. So if you go on Thursday and you look at the bottom here of the time, right? Once you get into like 8 a.m., which would be New York session, and you go over to 12, right? It goes to 1700 because the day actually ends on Thursday at 12. So for anybody that's trading like funded capital, like Top Step or anything like that, especially Top Step, you're going to want to be exiting your positions around 11:40 a.m. because they're going to liquidate that position at 11:45 a.m. Right? So just kind of remember that. Now, really quickly, this will be the 1 hour here on the left is what we'll kind of keep our focus on where the week started. And then I'll kind of walk you guys through what we ended up doing on the day, almost intraday right in here. Okay. At the bottom, you can see what day it actually is. You can see where the market open price is, something that I use quite a bit. Um, and then I'll kind of show you guys where we ended up taking some orders. So when you look at Monday here on the left, we had that market open price started to come up, right? Start to make new highs in that overnight. So I don't really care about what happens in overnight. I just watch who's winning and where liquidity is being built up. And so right here around 3 a.m., 2 a.m., price started to come back down. And then I like to look at my charts around 7 a.m. and start to, formulate a game plan for that week. And for me, I was already wanting to see more upside and attacking more of these people that were playing this level because we doused those lows to start the market, right? Market open came, took those lows from that previous day, right, in that week, and then started to rally up overnight. And so as you can see, when you come into here, right, because it's 15 here on the right, when you come into here and you mark that New York Open, and I'm going to kind of go through this briefly and quickly, but we'll get better at this as we go. All right, so when you mark that New York Open, you can start to see, guys, something I pay attention to is higher time frames. Higher time frames, demand and supply, right? Because they're giving you the clues with the candles like this, and then giving you the shift in price delivery higher and pulling back under New York Open, right? Now it is a little tricky as you get into the smaller time frames, but you just have to start to kind of look for the area and have an idea of where you're trying to get to. All right, so for me in this position here, I actually took the New York position. We ended up taking a buy position under old lows up to this area here, and then price ended up coming back and taking us out for a small, I think it was a small win that day. Then Tuesday was the next day, so I'm gonna move this here to the end of the day, right? So Tuesday was kind of the choppier day, I would say, of last week, right? When you really look at it, because now you're looking at this would have been Tuesday's open here, just kind of give you guys a reference point and idea. I like to really use points of interest. Okay. All right. So this would have been Tuesday's open. All right. And obviously we're bullish, right? That was Monday. Everything was pretty good. And then we opened up for Tuesday. Overnight prices, guys, in the bullish market, sometimes they create what's that fear of missing out because they like to rally the price overnight, and just make people just sick to make them feel like, oh shit, I didn't really get into the marketplace. So Tuesday overnight price rallies. Then you have the London Open, which would have been like right here. And then price just kind of goes sideways going into the 5, 6, 7 a.m. time, which I like to start to evaluate and start to formulate a plan. Now, what happened for me here on that day, what made me get into this setup here was the fact that price was going sideways and we had a massive push up from the daily open. But what happened was a shift in price delivery in the session. So like where my eyes were actually focused was when price came right here, made this low, and then price went like this, and then closed higher. As you guys can kind of see right there, it closes higher. And from that moment on, I seen that as a shift in price delivery on the 5 minute and 15 that I wanted to essentially attempt this area here, putting my risk here, and then using most of my take profit at that old high, right? And that's what ended up happening, right? We ended up being able to frame up a pretty nice move here. Definitely was like a 1 to 4 position. So let's say you're framing it off of this candle here. Your risk would have been on this low here. So like a 30-point risk. And then for the top here, was like a 1 to 3. So it's a good setup, right? And then when the price ran up and actually closed higher than here like this, gave me this down candle and then closed higher again, I trailed all the risk up to here pretty much. And then I was able so I partialed at the breaker structure, right, at the old highs. And then I had 2 contracts on that you guys usually watch my trades or people that do watch my trades. And then I moved the second half of it to here and price continued to go into that 310 time, which would have been 15 here, liquidation time. And then they ended up cutting the position up in here. So I initially taped it off here just in case. And then they also kind of gave me another down candle here. Price started to go. So like around like three o'clock, I started using this down candle's low as my risk to kind of trail that off for Tuesday. So that was what Tuesday kind of looked like, right? And then when you kind of, let's say here, we go fast forward into Wednesday, and I hope this kind of helps you guys just kind of see the week, right? Because you can really see, really what you're doing if you're plotting your positions, if you're plotting your bad positions and X's, etc. So this will be till the end of Wednesday. Is this Wednesday? Wednesday, right? So now you can see the overnight price, right? You're always wanting to identify what overnight price is doing and where the liquidity is. All right. Once you've identified that overnight liquidity was here, it was easy for me to see potentially that, we've been rallying up Monday, Tuesday, and now we're coming into Wednesday that we could possibly anticipate a retracement back into an imbalance, back into old levels, right? Key levels. So I have this as a key level. So you guys seen I was posting more about that. We ended up waiting for the New York Open was here. So I'll kind of move this here really quickly. The New York Open was, I have to do it on this one. Okay, so this was okay, so this was Wednesday, right? New York Open. Now, I was a little antsy on New York Open on Wednesday, and I decided to take a pre-market short where I ended up putting, now this is before obviously New York Open with the big blast here, but I had ended up putting my risk here, and I had entered like somewhere here around that 22,500, putting my risk at the top, wanting to see prices, come back down into somewhere like here, right? Break down into an area like that. Price obviously took me out. Sometimes you have to experience the loss to be a boss. And what ended up happening was the fast move up, ended up presenting the area that I wanted to see, ended up taking my short right here in this area, putting my risk at the HOD. Price then did that thing, right, where it made that lower low. Then price came back up, right? And I was able to add in a little bit more with the same risk placement. Okay. Same risk placement when price was coming back up for the mitigation into those 520s. And then it all came down to timing, right? And I'll talk more about this as we continue to make content. But I like to take my trades in the first 15, the last 15 minutes of the hour. So as you guys can see right here, this was actually 9:45 into 10 a.m. So right at 10 a.m., price was closing in this area where you could have been basically coming back in, attacking that LOD or low end of the day, right? So that's what I ended up doing. Price ended up coming past here. It broke past the demand, closing right here, starting to show signs as if it wanted to go. I ended up taking my trade that I had from here and trailing my risk down to here, if that makes sense, right? Because price had, as price makes money available, I want to be able to take money, right? So I had moved my risk down to here. Price came back up before around, this was around 245, 245 to about 3 o'clock, comes back up and takes me out for the trailing risk, right? So small win, but still, found a pretty good setup and, there was definitely areas for improvement in that area. But the concepts played out, the 15-minute mitigation, selling price above New York Open in bearish conditions in that situation, right? Because we were anticipating a bearish condition to come down and take liquidity. I thought it was a pretty fair setup. All right. So we'll fast forward here to this would have been Thursday. All right. So fast forward into Thursday. And as you can see, right, we'll move that New York price um, for Thursday, which would have been here. Okay, so now you can kind of see it. It's a little distorted, but like for my support resistance traders and people who just study the markets and study other players, right? This essentially would have been a resistance that could have turned to support for some people, right? They see that as that area, they use 22,500 as that type of area to kind of identify something like that, right? So you just have to kind of know and have that into your thought process. Now, one thing that happened here is what I call the inversion shorts trap, right? They end up getting people to short New York Open, right, to then absorb them on a 1 hour wick, 15-minute dump, 5 minute, 1 minute mitigation back up to the upside, creating an RSV setup that attacks the HOD. So that's what you ended up getting Thursday, right? Thursday was a beautiful setup. I'll kind of show you guys on the 5 minute. Let's go here. Thursday would have been the 26th, correct? And then to do the time on that, I guess that would have been 8:30. Okay. Okay. So this was that 5 minutes. This is like my favorite type of setup when you get something like this, a 1 hour wig, 15-minute done, 5 minute done, 1 minute mitigation type setup back to HOD. And so right here, 8:45 into 8:50, price extends down. And it's still at this point, guys, you got to think about it. At this point, people are still hacking away on the left side of the V, right? They don't know that the turn's in or not. All right. So they're basically just getting clapped. All right. So what we like to look for here in this situation is to wait for that first sign of strength, that second candle, and we use LOD as our risk and attack HOD, but we're using the 5 minute demand candle, right? We're not waiting for, ICT trades to get in after the 5 minute structure breaks already. Because why? Because we're getting in inside the demand candle in the second candle, putting our risk here so that when the price does close higher high here, come back down and go back again and close another higher high, we're able to trail our risk to the down candle in the uptrending market. Okay, so we have a special way that we actually trail our risk, and that's more in detail as well. But if you want more questions, just DM me. But that's what we were seeing, right? So we ended up taking positions in the 22,500 area and then being able to partial some of that position when it actually closed higher, showing signs of strength. And then price kind of mingled around, went higher again. And then that remaining second half volume on that trade got started trailing based off down candles in the uptrending market, right? Now, if you take that trade late and you're taking it after the 5 minute structure break, most of the time, the target's still going to be the HOD. So you end up reaching that right here. And then now, because you took the area so high, you're susceptible to the New York Open, fast pump down to go higher, right? And so for me in this situation, this was on Thursday. Like I said, I took that buy up, was able to take that HOD, and then was anticipating that, oh, okay, price was at an area. If you guys look there on the left here for shorts, I was anticipating that, oh, okay, maybe this is a fast up candle in 22,600 area, and we'll slide back off and come get, 22,500 in these guys, right? But, I ended up shorting. If you guys go look in the Telegram, I'm sure you'll see it. I ended up shorting right under that 22,600, putting my risk at that current HOD at that time. Price came down to what? New York Open. And what I always say, if you're in a position, buy or sell, protect or pay yourself at point of interest. Price hit that point of interest, hit that demand level perfectly, right? And just exploded back up, right? Continuing the bullish market. So that was still a pretty good day. But I also realized that I could have just continued on to my bias to continue higher. Okay. Okay, so let's see here. Okay, so then we'll move on to Friday here really quick. 'Cause that's what I really wanted to talk about. And we'll finish the week and just kind of see what we're planning on seeing here. All G. Yeah. Okay, cool. So here's Friday. So we'll move this over to here. Okay, cool. So this is actually where it needs to be. Okay, so same thing, right? We kind of went through it very quickly, right? A lot of, I'd say manipulation and market open was already a push up. Very difficult day here to, I would say, find a pretty good trade, but you're still attacking HOD and then covering the rest of your position and kind of just waiting to see what can happen. Monday, Tuesday, you had two bullish days. You would anticipate some kind of pullback in this area. They kind of trick sellers again in this area, then to rally again on Thursday. And then Friday, we come into the market and basically the same thing, right? We had the overnight price come up. Buyers were stepping into the marketplace. London open. They still had more buyers coming into the marketplace. And then what happened for me, guys, that now this happens to, all of us in different types of situations. But what happened for me was I actually took this trade on the buy side, 1 hour wick, 15-minute down, 5 minute down, mitigation type setup. So it looked like this. All right. This was my second one of the day. This is the first one I took, okay? And so that first one I took, I ended up seeing this dump candle here, right? And then that New York Open was very disrespectful in how they, ran down the price to kind of reach for overnight players, but then came back up. And something I noticed, right, in that first 5 minutes, 8:30 to 8:35 was that sign of strength close right there, right? So from that sign of strength, I immediately started looking at where's that low of day, and then where would that next HOD? So from range to range. Right. So we ended up entering on that tap back to New York Open with a target of here. Right. And we ended up getting that. We ended up getting that price delivered. Right. Comes up and then runs and makes a new HOD here. Now, when it ran up and took this price, I was two contracts deep and I cut one. Right. So now I'm down to one and I have it break even. My entry was literally New York Opens. I had my risk just a little bit in profit. Now, as you can see here, 10 o'clock from at the very bottom here, 10 going into 10:45, basically 11 a.m. Price came in 3 points of going from my normal target, an HOD swipe, just to do that, right? And be done with the second half of that position. Came in 3 points and started to break down. Now, the way I trail my risk on top end of the balance is I had my risk trailed to here and price just kind of toppled over and took out my second part. Now, for me, I didn't really need anything else that day. I had, secured a bag for the day. I think I was $1 away for people who trade Top Step. I was $1 away from a $200 a day win, right? So I was like, oh, cool. I'll just, look to buy this up again, right? Because I was just new to buy tops and sell bottoms, and end up losing one random trade right here because I really just wanted to see it. Just go ahead and push on through. I needed literally like $1. So everybody that you're gonna make mistakes, when you're trying to force an outcome, right? That's something I'll talk more about, like on mindset and stuff. But just a little mental mistake didn't really cost me. And then I ended up, walking my dog, doing a lot of different stuff throughout the day. Came back around that power hour time, understanding that shorts were going to cover a massive position like this on a Friday. right, to be able to make money before the weekend or whatever it could be. And price ran back up. We ended up finding a buy around that 2 o'clock time. We ended up finding that buy position and rallied that thing back up to the 22,750s, taking out this liquidity here. All right. So really quickly, I know I've kind of yapped quite a bit. So what I want to talk about though is just like where do we see this all going? All right, let's talk about that really quickly. Where do we see this all going? Let's go back to the higher time frames here really quickly. So for me, YM Dow has quite a room to go, right? This to me, when it comes to ES, it's very evident and clear that, this level can be delivered, especially since we have SPY and QQQ already delivering the levels. And then like we've talked about here, this price being delivered, I think it's like 22,873s, whenever that all-time high is here. So what I can anticipate is, the month to close, we get that all-time high here on Monday. And then we'll be back to reevaluate our new monthly plan for what we see going forward. So, okay, make sure I went over a dollar. Last thing, like I said, I think we're still pretty bearish on dollar and can see more downside. So, um, let me know if there's anything I can change, guys, or if that, obviously the audio will get better when I get the microphone and then I start hooking up like OBS and stuff. But other than that, that's pretty much what I've seen for last week. I'm going to be going through pre-snap reads. I'm going to be opening up calls for people to trade live with me and stuff as well. So just be on the lookout for different things inside the Telegram and the Trade House Discord or Telegram. That's where I'll be, pretty much dropping stuff. But obviously, my Omni Profit Telegram, if you're not in that, it's free. Go ahead and join that as well. So, okay. So main thing I want to say is just, this week is focus on not forcing any outcomes, right? Learn to think in probabilities, really listen to the audios, go on my Telegram and make sure and print off the 5 fundamental truths about trading with Mark Douglas. And just don't be so hard on yourself. Make sure you're doing the things off the charts that are going to help you on the charts. Right. One of the main things me and some of my my wolf pack, my close guys we talk about is just holding yourself accountable, right, and being able to keep your word with yourself. Right, but tell yourself you're going to do this, then do it. Right, and just keep building small wins outside of this arena, right, where you're going to be obviously executing, some massive positions and it can be life-changing positions. You want to have everything already set outside of this in a certain and created your environment so that when you come here, it's almost like if you've ever played sports, just really quick, for example, if you ever played sports, you're going to practice how you're going to play, right? So you would have individuals who would practice at like 120%, but when they got to the game, it seemed almost as if everything was very easy, right? And so that's what our goal is here to do. So appreciate you guys watching. I look forward to, quarter 3 and just really taking off and being able to put out, valuable content that can help the next individual grow in this space. So that being said, I appreciate you guys, and I will see you guys on tomorrow's call. Just DM me if you're wanting to be one of the 10 people that will trade live with us for July. Have a good one.